You're checking out the Investor Shed podcast with Nick Beveridge and Jeremy Kitchen. They're on the path to financial freedom and they're taking their community with them. Stay tuned for the best free real estate investing advice on the internet.
Welcome to the Investor Shed podcast. I'm Nick Beveridge here with my co-host Jeremy Kitchen. Good morning.
They call me beautiful Jeremy Kitchen around these parts. Sometimes you validate me with that, sometimes you don't. So today I'm feeling a little left out, but I'm doing great. How are you doing today, Nick?
I'm doing pretty. Thank you. Not beautiful.
You are doing pretty.
Yeah, thank you. I got some new lighting set up here. So if you're watching on YouTube, I hope you enjoy all this brand new lighting.
Yeah, you're looking fresh today, Nick. Your lighting setup looks good. Your camera looks good. We're making big moves in the Investor Shed podcast. Speaking of the
fresh.
Investor Shed podcast and fresh, we got Jorge Abreu on the podcast with us today. We had a really good talk with George. Nick, tell us about it.
George, aka Jorge.
Mm-hmm.
You can call him George or Jorge. He takes both. Yeah, great conversation. George is he was an engineer with UPS, and now he is a mega real estate syndicator with multifamily, doing a lot of deals. This guy's gotten into like over 8,000 units. So you guys are going to enjoy this one if you're interested in syndicating. He's grown his business vertically in different areas as well with construction and stuff. We'll talk about that. We'll talk about how he lost $750,000 on a deal, but then got it back. So that was kind of cool to hear. And then we just talk about being an introvert and what that's like, you know, having to make that journey in real estate sometimes to be able to talk to a lot of people and just get comfortable or used to it. But anyway, you guys are going to enjoy this one, I promise. So stick around, get your chapstick out, eat it if you have to, because you're going to be hungry for more after you listen to this one.
This episode's not sponsored by Chapstick.
No, it's not.
All right, everyone. Welcome to the Investor Shed podcast. I am the host, Jeremy Kitchen, here with my co-host, Nick Beveridge, and our guest of the day, Jorge Abreu. George, how we doing today?
Doing great, man. Excited to be on this podcast.
Yeah, man. Thank you so much for joining us. Nick, how are you, by the way?
Doing great. Yeah, let's get going. Appreciate it.
I took over the intro for you. I feel weird. I feel like I'm in the driver's seat and you're in the passenger seat.
Yeah, Jeremy's now the co-host. No, I'm the co-host.
Am I in the back seat?
The main
Yeah, you're backseat driving,
and
George.
and we're ignoring our child in the back, George.
Yeah, well, definitely, George, thank you so much for joining us. Why don't you start off by telling us just a little bit about yourself, if you don't mind?
Absolutely. So, born and raised in South Florida. Both parents are from Cuba. I was born in Miami. And I decided to go after a bachelor's degree in electrical engineering. But, in doing that, in those fabulous 5 years, I decided I didn't want to be an engineer. And that's when I started looking at other sources of income. And I knew I wanted to start my own business, just wasn't sure what. And then kind of found my way to real estate investing and got my real estate license, got my mortgage broker license, really because I didn't know any better. But, I got my feet wet in real estate, and then finally ended up hiring a coach to learn how to do single family investments at that time. That was about 16 years ago.
So what year was this ish? This was just before the crash, or?
Yeah, this was like 05. Probably 06 is when I started doing it full time. I quit my engineering job at that time and went all in. So, had an awesome 2 years, right? And then 08 came.
So you were a real estate agent and a lender?
No, so I'm saying I only did a little bit of that, and my goal was to do investing. So in 06, I was a full time real estate investor
In Miami?
in Miami.
Ouch.
In Miami. Yeah. it was nice for 2 years, right? There was deals that we wholesaled for $100,000, but
I know where this is going though.
yeah. So 08 came, and at that time, this was my job, right? I was building out the company, and this is all I had, and you couldn't touch anything in Miami, right? Prices were dropping daily. Like, you just couldn't do deals. There was no way. So at that time, it was like, do I go back to being an engineer, or do I figure it out? And that's when we went and looked at other markets. We looked at Dallas and Phoenix. decided to move to Dallas, and what we saw happening there was, yeah, there were foreclosures, and the market was definitely on a downturn, but nothing like South Florida. You could still do deals, so we made that move. Started fresh, and really right off the bat started building. So the prices were extremely low. We started building out a portfolio of single family, some small multifamily. I didn't love managing it as far as the property management part of it, collecting rents and all that. It wasn't really big enough. At least it didn't make sense to us to hire a third party to manage it. Didn't want to bring it in house. So as soon as the market kind of heated up, we went back to what we were doing before, was fix and sell or wholesale. And then about 6 years ago, so at this point, I had brought construction in house because I couldn't trust any contractors, and
Makes sense.
yeah, and we had scaled it pretty good. We were doing about 50 or so fix and flips, some pretty large renovations, so some new builds, right? Scrapping it all together and just building anew, and then a bunch of wholesales on top of that. 100 plus per year. But man, I was spread pretty thin at that point, especially with the construction company also growing, and I had a roofing sales team on top of that. And around that same time, I got introduced to multifamily syndications. So large multifamily apartments, right? Mainly 100 plus units. And before that, I figured the investors that were buying that were just these really large companies, and you needed millions and millions to buy these. But once I got introduced to the syndication model and the fact that I can bring other investors with me and take down the properties that way, it blew my mind, man. And I got obsessed. I put all my focus towards it. And since then, it's been about 6 years. I've acquired a little bit over 8,000 units and exited another 1,600 or so. So um, it's been a fun ride.
Gotcha. So do you miss single family at all?
Not at all, man. Not at all.
Or so can we go back a little bit before we go ahead? I'm really curious because I also worked in Florida like when the market right after it crashed. Actually, I was there just before the crash, and then I moved away, and I came back right after things like the dust kind of settled and prices were just insanely low. And I remember like looking at condos in Miami. They were like 15,000, 25,000, and you can see just the history of just a couple years prior to that. They were in the a couple hundred to 300,000. Does that sound right, or am I exaggerating?
In certain areas, for sure. I mean, there was, they overbuilt. You're probably talking more about like the older condos. The newer condos, they went from selling for a million plus, and then you had these empty buildings that, man, they would hand it over to you. Like,
Yeah.
Yeah. And so I became a real estate agent in the Orlando area, and I remember showing condos and townhouses and stuff that were once selling for, 200-300 grand, and a lot of them were under 100 grand. A good medium price point was like around 75 to 85,000 for a very livable, move-in ready with a pool. And it was just insane the amount of depreciation that had happened in that area, and I just can't imagine. Like, so I'm just assuming. Did you get caught in any of your projects, or did you not really?
not really, man. So, since we were doing a lot of the fix and flips, at that time, we felt it coming, believe it or not, even though it happened quick, right? We ended up with one house that we ended up doing a seller finance deal on. And I like to say we escaped.
Yeah, it sounds like you've done a lot of pivoting, George. Obviously, you started out as an electrical engineer, then you went into single family fix and flips, and then from there you're just into these multi-million dollar syndications. Like how did you pivot so quickly, and what was your strategy behind that?
Man, I've early on I realized the more flexible you are, the easier you can adjust with the different markets, the better, right? If you look at the companies that have gone bankrupt, right, it's because either they were over leveraged or they couldn't adjust quick enough. So, that's one thing, and we're always trying to look at the data and predict what's going to happen. Sometimes that's harder, right? When you have outside parties pulling other levers, but yeah, I mean, I've always tried to keep our overhead down as much as we can and be able to make those pivots.
Awesome. And numbers are always your friend, obviously. I mean, depending on where the numbers come from, it's good to have this data because, 20 years ago when you guys were in the market, like the MLS was barely a thing online. Like,
Yeah, yeah. I mean, I tell people there's so much knowledge now. It's so easy, right? Like when I tell you I didn't want to be an engineer, and I started doing research, it was me going to the library and
yep.
picking out books and reading. You know?
Yeah, Bigger Pockets wasn't around back then. There was no real estate investor podcast. I mean, we've all heard of Robert Kiyosaki back then, but it's not like we were understood the exact game that he was playing, right? It's a whole new world with all this technology for sure.
Yeah. So George, if we can't, so we don't skip over this part, what you're talking about, just keeping your overhead down. Obviously, you're in a position where you're buying a lot of stuff. 8,000 units. What kind of team does that require? Like, can you give us an idea of what your org chart looks like, and what kind of expenses it takes to run a business like you have?
For sure. I mean, like I mentioned, right, we try to keep it as light as we can as we've been growing and kind of just filling the spots as we see the need coming and where the bottlenecks begin to kind of build up. So, I mean, right now it's you've got myself, which I play the CEO visionary type of role. And I wear different hats here and there still, but I like to think that's all I do. And then we've got my partner who is more of the day to day operations, call it maybe the COO role. And then we've got a chief investment officer who mainly deals with the equity side of things and making sure we can raise the equity we need on our deals. We've got a director of acquisitions. We've got a director of asset management. We've got a couple VAs that help on marketing and admin stuff. I've got an admin that I kind of share between the construction company and the real estate firm. We're about to bring on investor relations. That's about it on the real estate side, right? I've got a whole other team on the construction side, and then we just brought in property management in-house last year. So that's got quite a bit more employees.
So on the real estate side, are a lot of these people just employees, or do any of them have ownership stake?
Yeah, we've done this a lot of different ways, right? And once again, trying to keep the overhead light. So most of them have some type of profit splitting, not necessarily ownership in the company, but at least some type of bonus profit split with some type of salary. And then our chief investment officer actually has ownership now, is the way we decided to do that and not take on the salary. So
And George, it sounds like obviously you've done a lot of stuff, and starting again just from your electrical engineer days, I do want to talk just a little bit about your single family experience and what made you get into multifamily, large multifamily. Because you said when you were flipping and you were wholesaling, like you were doing 100+ deals a year. Like that sounds like good volume to me. So why make the switch at that point?
it was good value, just very transactional, right? I mean, it's a lot more transactions than we do now. A lot more to manage. It was very difficult to set up the systems and procedures and find the team where I didn't have to be so involved in the day to day. That was kind of my struggle.
Gotcha. And now you've got this big team around you helping you with all of your current investing. And just kind of going back to what Nick said too about the team, like how important is it that you have your key players set up for you, and how important is it that you have the right ones set up in the right positions?
Oh man, right person in the right seat is everything. I got that from reading Traction. Not sure if you guys, yeah,
Gino something, right?
Gino Wickman,
Gino
yeah,
Wickman. Yep. Okay.
yep.
It's on the list. I haven't read it yet, but that's coming for
Oh,
sure.
it's a great
So,
one, man, and it talks a lot about that, right?
mhm.
Making sure. So now I've learned a lot throughout the years, right? I've learned one that having the right person is very, very important, almost more important than the right seat. Meaning, I'd rather take somebody that meets our core values, is aligned with the vision and core values, and maybe doesn't have the skill sets. I'd rather take that person and put my time and effort or our team's effort into training them and getting them skill sets versus somebody that's got all the skill sets, but they don't align with our core values. Done that in the past and doesn't end well.
You can always teach skills, but you can't teach a person's culture or how they jive.
It's definitely easier to refine skills than refine, culture, like you said. So
Yeah, and we put a lot of focus on culture too, right? The company culture.
let's talk about that a little bit, George. So obviously, if you have a good company culture, what does that look like for you and your company?
The company culture, is that what you said?
Yeah.
Yeah. So, we, for every year, we get aligned on our goals and what we're going to do. Make sure everybody's on the same page. We constantly checking in with each other. Everybody's got their role and their place, but it's a team. Like if somebody needs help from somebody else, we make sure that line of communication is open and that nobody's going to be like, well, that's not my job. That's, if they can, and it's not going to, mess up their duties, then yeah, they're going to step in and help. We always do quarterly meetings with team building events and outings, to keep that culture in there and just build onto that teamwork. All our core values and um, mission statements definitely incorporate that somehow, some way.
Yeah. Got to keep the culture alive for sure. So you're running a couple things right now. You're running your construction company. Can you talk about that for a little bit?
Sure. So, like I mentioned, when we first started doing these fix and flips, we got burned a few times by contractors, and then my goal has always been to whatever I'm going to do, I'm going to scale it. I'm going to do it big, and that became a huge bottleneck was finding good contractors. And then, I mentioned electrical engineer and having a job. I didn't really have a job as an electrical engineer. I was working for the UPS engineering department, but really what I was doing was an in-house GC for UPS. Like if one of the warehouses needed a new roof, I was the one organizing all of it. If we were expanding a warehouse, I was the one, getting all the contractors. So nothing to do really with electrical engineering, but I liked it. I enjoyed it. So with that experience, and then I've got a couple of my uncles actually own a construction company, and did an internship with one of them, and kind of I felt like I could do it, right? So went ahead and opened that up. Game changer right off the bat, right? I learned a lot of things in the beginning, but once I got it going and I got the systems and procedures, I mean, we gained the confidence to take on these larger projects and deals that other investors were scared of. Because of that, we were okay taking them on, and that paid off on the single family, and it's transitioned over to the multifamily as well. We're not scared to close on a property, 125 units that's all vacant, that we need to go in there and gut, because we know we're going to estimate it and we're going to be capitalized correctly and we're going to get the work done on time, and that kind of stuff. So it's been very helpful. We do still take third party work, right? I like to have anything I do for it to stand alone. If we ever want to exit, I don't want it to just be solely on one of the businesses. Yeah, I mean, building the team has been not easy with the construction company. It's one of those industries it's hard to find a good project manager. Site supervisors, not so much. Project managers for sure. That's a hard position to fill, and then even the accounting is very intense. So yeah.
Yeah. So George, you mentioned that you got burned by some contractors, and that's what motivated you to want to do your own, kind of start your own construction business within your team, right? So what kind of, if you don't mind sharing, what happened? How'd you get burned by contractors, and what'd you do about it?
Yeah. So in Miami, we paid somebody too much up front, right? And next thing you know, they're gone.
Yeah.
Um,
Yeah, that's one thing I've learned with contractors. If you pay them, they're done.
that was the first time, right? I want to say we learned from that. But then when we moved over to Dallas and we went back into doing more and fix and flips. that became more of a quality issue and just expectations not being met, and the communication, and the change orders, and um, more of that stuff. And then, yeah, we started kind of micromanaging it to the point where I was just like, man, like I'm just gonna go hire these subs and build out my own sub base and be my own GC.
I love it. Obviously, I've known Nick for a long time, and Nick ran a construction crew, and it sounds like you guys went through some of the similar perils. If anybody listening is wanting to grow a construction company, what advice would you give them to find good contractors?
Don't do it. No, I'm just
Don't do
kidding.
it. Don't do it at all.
Yeah, I was going to recommend that too.
Yeah, yeah.
Don't even bother. If you want to be an investor, be an investor. Don't be a contractor.
Yeah, yeah. Spend more time finding good contractors, maybe good
Yeah.
GCs. Man, just be ready. And this goes with any. If you're trying to go vertically integrated, or you're trying to bring some other function in house, like be ready for it, man. It's a whole other business, right? Like don't be trying to grow one side of it and not have systems and procedures and your team in place, and then go try to grow this other side, right? Like that would be my best advice.
Take it step by step for sure.
Yeah, I can go deeper into actually finding contractors and subcontractors, but yeah,
Build out your systems. That's a pretty good answer, honestly. Like,
Yeah. Well, it's not just about building your systems. You got to maintain those systems. You can't just you can't hire a crew and get everything in place and then walk away from it, because then it's just going to fall apart right away. Like you need somebody to, you either need to maintain it consistently, or you need to find somebody else to maintain it consistently. And it's just hard. I mean, it's just running another business. And if you can't give it your full attention, it's likely not going to work out.
agreed.
awesome. So obviously from there, from your single family experiences, you transitioned into what you're doing now, which is the big multifamily syndications. I've always found that super fascinating, right? Because it's a good way to raise money and provide value for a lot of people. Can you talk a little bit about your raising capital?
Yeah, I mean that was making that transition from single family to multifamily. That was probably the biggest hurdle, because analyzing and the valuation of multifamily is completely different than single family. But I am an engineer. I am really good with numbers. I took me a little bit, but once I'm solid when it comes to underwriting and analyzing deals, caught on to that quickly. I had never raised equity before. Our single family, everything we did in single family was either our own money, or we had one or two private lenders that we had built a relationship with, but we'd never gone out and raised millions. So I kind of saw what was being done as far as building that thought leadership platform, and um, really becoming the expert in the multifamily space. So started working on that, and then our first deal, we brought on a partner that had experience raising equity, and that's how we were able to complete our first deal. Then our second deal, we were doing the same thing, but that partner had too much on his plate. And right when we started, we already had the deal under contract. We were ready to go. He came to us and he's like, "Hey guys, like, I'm not gonna be able to do this. I'm not gonna be able to raise this equity." Luckily, I had started putting those seeds, right? I started planting those seeds, and it was earlier than I wanted to try, but we went and we just kind of put it out there. A lot of networking. It was sending drip email campaigns to our list, and we brought over our single family list. Maybe got a couple from that. It wasn't huge. I mean, the list was huge, but it wasn't the investors that came from it weren't huge. And then from there, it was just continuing to grow on that. We saw the things that worked, so went really hard on social media, and then attending these events and networking, and then continue to build. Uh, Speaking at events, every year I'm speaking at different events, and yeah, it's gone pretty well.
So George, when you were working for USPS or UPS?
UPS.
UPS, yeah. Did you ever think someday I'm going to be on stage talking to groups of real estate investors?
Never, man, never. Like, I am the definition, or at least I was the definition of an introvert, right? I remember, so I was in a fraternity in college, and um, I was on the board. I was vice president, one of the vice presidents, and even speaking in front of them, like I would get so freaking nervous, and um, even to the point where my company, right, like the construction company and the real estate company, I was growing it. Like in our meetings, in our quarterly meetings, I would get nervous. So no, I never thought I would be on stage speaking to 500 people about investing in multifamily. But I knew this was the space I wanted to be in, and I knew to grow to the level I wanted to, I was going to have to do it. I didn't have this massive network already that I can tap into. I was going to have to build it. So, man, I mean, I lived in that uncomfortable stage every day for years, and it's gotten a little bit more comfortable. It's still, yeah, I'm still learning, but
Yeah.
um,
I can totally relate to that. I mean, I'm a huge introvert. And even I remember going through high school, we had these speech classes where you had to like get up every once in a while and like talk in front of the class. And I knew anytime it was going to be my turn, I was going to be sick that day because that's how deathly afraid I was of talking in front of people. And today, every couple times a month, I'm speaking in front of large groups of people, and it was not easy when I started, but I don't know what it is. I don't know if it's you just get comfortable doing the same thing after a while, or if you just get really knowledgeable on a certain topic, and it's just easier to talk to people about something that you're passionate about. I really don't know what it is, but I
I know for me that's what it is, right? Like I live and breathe and eat multifamily real estate, right? I know the ins and outs of it, like, but man, if you put me on stage and you tell me to, hey, go wing this, talk about I don't know what, right? That is not going to be pretty.
No.
exactly.
I definitely have to prepare when I have to do my on-stage stuff. Just a quick tidbit about that, obviously. I think it's public speaking is the most feared fear in the world. It's even above dying. People are more afraid of speaking on a stage than they are of literal dying.
Oh God, I heard this. They'd rather be dead, right?
Yep.
Than speak at their funeral. Like,
Yep. It's crazy
Yeah,
for sure.
that makes sense.
So when
So
you
we're
got
not
started,
the only ones.
yeah. So when you got started doing these events, George, did you have a social media presence by that point, or were you just did you?
I did.
You did.
I
Okay.
did. Well, no, this doesn't translate to the speaking. This is before I started speaking, but just social media in general. Like I remember, I was always going to these networking events, and then my social media was really starting to get traction, and I went to one of these events, and next thing I know, I've got people like lining up, ready to talk to me or wanting to talk to me, and I was like, man, okay, I can do this. This makes it easier than having to be in a room of all these people I don't know and having to start that conversation. And yeah.
I've noticed too. So I do a lot of social media, and it's improved my public speaking tremendously. I've only been an investor for 2 to 3 years. I don't have the experience and the know-how like you guys, but I am still learning. Just doing social media and getting my face and voice out there, and talking to the camera like I'm talking one to one, not like I'm talking one to a million, translates over to when I am hosting an event. Like, okay, I'm just having a conversation with this person. I pick out one of the audience and kind of hyper focus on that little front row, and it's easy.
You make it sound so easy, Jeremy.
I'm sorry. I'm a natural
But you're-
extrovert, so like you put me on a stage, I'm gonna have a good time. So,
Yeah.
so when people are investing with you, George, what's the minimum requirements you're looking for if somebody wants to get in on one of your investments?
Yeah. Most of our deals are 506Cs, meaning that it's for accredited investors. So, for them to, not everybody knows what that means, right? It doesn't mean you have to go get some certification or anything. It just means that you've got to have a net worth of over a million or make over, I believe, 300,000 or yeah, I think it's 300,000.
Yeah, it might be 200 single, 300 married, I think.
Yeah. Yeah. There you
George, how do you verify that somebody is like a net worth millionaire um, before you will present a deal to them?
Yeah, so they have to, it's either supply, we have a template letter that their CPA can just sign off on. So if they can bring that to us, the CPA is certifying that, yeah, I agree to this. Or we have a third party that we work with that will verify, a third party company. We don't self verify it. Yeah, it takes liability off of us, right?
Yeah, it seems like a lot of work.
Yeah. So we still do some 506Bs here and there, which means we can take on non-accredited, sophisticated investors, but we need to know them, right? Like it can't be mass marketing to get those individuals.
So obviously, when you had your list for your single family and you have your list for your huge multifamily, like you said, those are two different lists. A lot of these people who are doing your single family investments don't have, $100,000 of spare capital that they can just like toss into a deal like it's nothing. How easy was it for you to get a new list and just generate new leads for that list?
Oh man, it's not easy, right? You got to create some type of funnel. You got to have different sources, right? So social media, the events, whatever else we're doing, this podcast, right? All these sources need to come to one place where you're either giving them some type of magnet, right, or um, a reason for them to give you their information and begin to receive your newsletters and your emails. Um, so one issue I ran into was I was doing all the right things, but I didn't have that funnel, right? So I mean, it was like wasted efforts. Even the live events, I would get all these business cards or all these contacts, and then what, right?
What's the
Um,
next step?
Right, right. So, I kind of became obsessed with that. Like, okay, I need to have, if we're going to scale and we're going to raise, right now we've got three deals that we need to raise $50 million for in the next 4 or 5 months. There's no way you can do that by just business cards or something, right? Like, so now, somebody finds us online, if somebody finds us wherever, they're going to be led somewhere, and hopefully they're going to like what they see and give us their information, and then we're going to stay in front of them with hopefully good content, good education, which eventually hopefully leads to them investing with us.
Yeah, got to be top of mind for sure on this stuff.
George, if I could ask, how have things been going the last year with the economy changing, rates shooting up? How has that affected your business? Has it made it more difficult to maybe I don't know if you're in the business of maybe making improvements and then refinancing your deals. I know, yeah, I'm still in the single family home game, and it was incredibly difficult for me over the last 12 months to have to kind of change up my plans on a lot of my projects when rates doubled. Can you talk a little bit about how the last 12 months been for you?
Yeah, absolutely, man. So I mean, we started this talking about adjusting, right, and being able to make those adjustments. So yeah, we've completely changed what we were doing before. We were very heavy on value add deals. The uglier the better. Obviously, more risk there, but larger returns if it all works out, right? But with the way several different things, right? One, I felt the pricing on these older deals was getting way too close. Like the spread between that and a newer A class deal kept shrinking, and to the point where it just wasn't making sense to me to buy something older that I can literally build it brand new for just a 20,000 more unit or something. And then on top of that, you throw the stress of the Fed raising the rates, the fact that maybe pushed into a recession here. It's likely going to be into some type of recession. A lot of that affects more of those C class workforce housing type deals. So we definitely had to change our criteria. Now most of the deals we're closing are A class, straight from the developer, maybe just a few years old. We're building some from the ground up. I won't ever ignore, or probably never ignore, a deep value add deal at a really good price. Just that really low basis, good price hasn't been there. Starting to change. We're seeing some changes as of late. Seems like the rate caps are finally increasing, and sellers are realizing that they're not going to get what they were getting in early 2021, right? Completely different market we're in. So yeah, we've had to change our criteria. We've had to, with the deals that we're managing, our portfolio, we've had to really, really operate hardcore, get those expenses down, get the income up however we can. Luckily, we saw this coming. We did not, by no means, did we have the crystal ball and see the Fed was going to raise the rates by this much. But we knew, being through a down cycle, we knew it was coming eventually, right? Like, there's no way you can sustain the prices going up the way they were going. Something was going to give. We thought it was going to happen naturally, but it didn't. And so that's why we started the property management. I mentioned that we brought property management in house. We felt that the adjustments that were going to be needed to be made in a recession like that, or just a down cycle, it was going to be very difficult with the third party management companies. There's a lot of unwanted expenses, and just we're really strong on building communities, kind of like we talked about. Uh, not only our employees, we like to have certain things done within our community and really build that. There's so many benefits to that. Not only are you making the community and your residents a better place for them to live, but at the same time, they want to stay longer too, right? Um, so less cost in turns and just vacancies and all that. Yeah, we've been really operating hardcore on our existing portfolio.
That's awesome. So you haven't really slowed down, just changed things up.
Correct. I mean, acquisitions slowed down for sure because our criteria became very, very, very focused, and there was a period there where just the pricing and the penciling and the unknowns, right? Like, when is the Fed going to stop? Well, I guess we still don't know, but yeah.
Yeah. So for the people out there listening and just wondering, like, okay, this guy's got like 8,000 units already and he keeps buying, like, when is enough enough? Like, do you have an idea, like, in your mind, how many units it takes to be satisfied? Can you expand on that for those listening, just wondering, like, dude, how many units does this guy need?
For me personally, man, I mean, I'm trying to build generational wealth here. Like, I'm trying to leave my kids something that, um, my goal is to be in the top 50 of multifamily owner operators. I want to be on that list. I want to get there as quick as I can, smart, but as quick as I can. Um,
So where do you have to be at to be in that top 50? Do you know?
Yeah, I mean, I just looked at it not too long ago. I think number 50 on there has got maybe, I think it was right under 30,000 units or so. So the top has got like 100 and something thousand. So
You're a third of the way there.
yeah, you can see it that way. But we gotta, the thing with syndications, and if you're exiting these every 3 to 5 years, it becomes a little difficult. So we're trying to find these newer properties. We're trying to see how we can hold them longer, right? And that's when you really start building that comfort and that.
Is that kind of what your guys' game plan is most of the time? Going in for 3 to 5 years and exiting and getting all the appreciation back out and putting it back into bigger projects?
That's what most syndicators do, right? And their projections, their return projections to their investors are usually off of a 5 year. With as hot as the market was, that 5 year became more of a 2 3 year. I mean, shoot, we had one that we literally exited right after the 1 year mark. Doubled the investors in money. Like, yeah, I guess to answer your question, yes, but we have structured some differently, and just set different expectations to our investors so that we can stay in there longer. Whether that's trying to get them most of their initial capital back through some refinances, or exit them from the deal if we hit a certain return metric, and that way we can keep them longer.
Gotcha. So just talking about your average investor in the deal, how much how much returns was your average investor expecting or anticipating on an average deal you have?
Yeah, that's been changing with the market too, right? But we were targeting somewhere in the 16 to 18% IRR, internal rate of return, and a 2x equity multiple. Now it's more of a somewhere in the 14 to 16% IRR, and maybe a 1.8 to a 2x equity multiple. Um, So just kind of coming down on those expectations a little.
Sure. Market softening, everybody's got to do it with it. So, yeah, that's pretty good returns, though, nonetheless.
I mean, it's still beats putting it in a bank for sure. And then, stock market is just all over the place. So
Yeah, stock market's not investing, stock market's gambling. I will say that until I die.
And your money's not always safe in the banks lately.
that you can throw that in the mix too. Yeah. Good point.
It's funny. I opened up one of my other savings accounts for one of my just checking accounts I made. And they're like, you get 5% on your first $500, and I'm like, that's like 20 cents a year. Anyway, it's like it's not even. I don't care about that because that's not even the return I'm going for. But I'm like, yeah, I'll put $500 in that account, whatever. So,
Yeah, it's crazy. I never thought, we went through and spread our money around. So I don't have more than 200,000 in any one account now.
that's good. I think it's really good to be diversified like that. So obviously, when you're doing these deals too, and then you're cashing people out with equity, does that sign up in your contract saying like if we hit a certain point with our equity, we just cash you out and we buy you out of the deal, or is that on a per investor basis?
It would be for that class share, right? So it would be any investor that invests in that deal in that class share. It would be structured out in the operating agreement, how the cash flow and how all that goes.
And what are your plans going forward with this, George? Like, what's your plans? Where do you see yourself in the next 5 years?
Next 5 years, man, continue to build out the team that we've been building, right? Really excited about the management company. Like we've got some really big plans there, and we feel like we're doing it a lot different, right, than others. So yeah, just continuing to grow. I'm happy with the companies we have and direction we're going. So just yeah, building out the team and systems.
Do you have any horror stories from any of your investments? Anything that's just been completely wrong? And if so, what did you do to overcome that?
Oh man, yeah, I got a few. We had some single family ones that some of these really large renovation. I mean, we're adding second stories and adding additions. I mean, there was a couple that took longer than they should have, mainly because of the city. And at the end of the day, I think maybe on paper it looked like there was profit, but with all the time and everything spent and energy, and depending what you value your time, not so much. On the multifamily, I mean, biggest one I can think of. Oh, and how I overcame that in the single family is I stopped doing single family. Um, but as far as multifamily, I mean, probably the biggest one I can think of is during COVID. So when COVID first came out and it was a thing, we had a large deal under contract. We ended up having about 750,000 in earnest money, and everybody backed out of the deal. Our lender, backed out. We had a big check writer that was bringing say about 90% of the equity back out. Um, and man, we kept at it for months, trying to line it all up. It eventually, the seller ended the contract, didn't want to give us our deposit back. Obviously, we didn't have anything for COVID written in the contract back then because that didn't exist. And so, man, for months there, we had lost $750,000, and we never stopped. Like that's one thing throughout the years, man. Always been relentless and just not giving up. But we finally got back in front of that seller, and so this was towards the end of 2020, maybe that things started looking a little brighter with this whole COVID thing. Um, and he still wanted to sell. We still wanted to buy the property. We had kind of adjusted our business plan, and we ended up making him another offer, including getting credit for that 750, right? um, and we ended up closing on it a few months later. So in 2021, I mean, the deal took longer than a year from when we put it under contract till we actually closed. So yeah, that was an interesting one.
There's a lot to learn and unpack there, obviously. With almost losing $750,000, like you could have given up and you could have went home and licked your wounds, and it would have hurt. It would have been a drastic thing for your business. But you kept going. and you got it done. Because I think in a lot of people's minds, if I lost $750,000 on a deal right now and where I'm at, I would never ever touch real estate investing again. Like, but I don't have a net worth of a millionaire though, so that's a different thing, obviously. Yeah, just staying with it and staying tenacious and getting the deal done. So that's awesome. Anything you want to add to that, Nick?
No, I just think, it's only if you're in real estate you can kind of stomach those kind of losses, because there's really, that I'm aware of, not really any other industries where you can just make it back if you really put your mind to it pretty quickly, or get it back in other fashions, which you did a few months later. You just went back to the deal and made it work. But it's, yeah, as long as you can. I mean, I've gone through a shit ton of losses over the last 12 months, and I've just finally, when I finally just accepted it in my mind, okay, well, I'm just going to make it back. It's I'm glad I'm in real estate because I'm already on track for that. It's, but yeah, I'm not there yet, but I'm on track, and I'm fine. I don't have to sell, I don't have to go bankrupt or anything. I just had to sell some rentals. There's a little bit of give and take sometimes, but real estate's one of those. Yeah, go ahead, George.
Yeah, I mean, it's the industry. You've got the real estate cycle, right? I mean, you can maybe say the economy kind of goes with it too, but in real estate, prices are going to go up. They're going to go up, go up, go up, go up, and then it's going to kind of plateau, and then maybe have a dip. It's not going to go all the way. Well, I don't know, '08 maybe, right? But usually it won't go all the way down where it was before, and then start going back up. Right, right. And I think on those downturns, well, I've seen it twice now, right? So on the upside, investors start coming out of everywhere, right? And especially now with social media and just all the content and all the real estate gurus, right? Once again, you got a bunch of people come in on the upside, and then on that downside, that's when the real investors are left, right? You start seeing everybody else disappear, and then you've got the real investors that stay, and usually they make a killing when it starts going back up, right?
And it's just a good thing. Obviously, if you quit while you're down, you lose. You game over, right? You have to be able to persevere and get through those hard times, and that's the biggest difference between someone who's successful, I think, and someone who's not in this business. So we are getting close to the wind down. Nick, is there anything you wanted to touch on before we got to that?
Now let's get to it. We're good. Yeah.
Awesome. Well, George, we just got a few questions left for you for the rest of the episode. The first one is, if you were to recommend one business or investing book to an investor or a business person, what would that be?
Shoot, I already mentioned it, right? Traction from Gino Wickman, I think is
Did Gino, did he write Rocket Fuel too?
yeah, yeah. There's a few of them. I think Traction is the first one, and then there's a few others.
Rocket Fuel's next. Gotcha. All right. Next one is, if you were given $30 million into one of your bank accounts, what's the first thing you would spend it on?
Oh man, assets. I'm not somebody to go get a Lamborghini or another liability. I mean, maybe
Right.
after I've bought a bunch of assets and I've set up a ton of cash flow coming in.
Yeah, I was looking at your website, and it does look like it's lacking some Lamborghinis here.
Sorry, man. Sorry.
I think
Common
you can sell
acronym
more
LSL,
coaching
lacking
courses.
some Lamborghinis.
Yeah. I would maybe. I mean, I'm all about the family. I'm sure I'd buy my daughters something ridiculous, but yeah.
That's awesome. We did have a guest recently who did say they would spin their, they would blow, the first thing they'd blow it on was their dream car, right? They've had this dream car ever since they were a kid. Like, yeah, I'd absolutely just buy that. Why not? I have more money. That takes care of like 500,000 of it. So it's always interesting hearing what people
Maybe
do
the
with
second
that.
thing.
Yeah, maybe the second. Yeah. What advice would you give to an investor looking to get started on either their, their first or second deal?
First or second deal. Man, first advice would be gain as much knowledge as possible, right? Get on podcasts, read books. If you've got money, maybe look into hiring a coach or become a part of some type of group. It's especially multifamily. It's very much a team game. Single family, I didn't see that so much. But in multifamily, I mean, there's a lot of partnerships happening and what we call co-GPs, right? Where you likely got like the lead on the deal, and then other partners coming in to help with other parts of it. So um, first knowledge, and then two, maybe try to partner with somebody that's got that experience.
I love it. That's awesome. And then how would you define success?
How would I define success? For me, I struggle with this. I'm not somebody that celebrates wins a lot, and um, probably something I need to get better at. But to me, success is being able to build a large company that makes a difference with our clients, residents, whatever it is, right, and our team members, and to the point where I don't have to be in the day to day. I literally can just check in and time freedom, right? Like time to spend with my family. I have some of that now for sure, but to the point where I can take 2 to 3 weeks off and not even think about it.
Awesome. It's a perfect segue into my next question, actually. So when you're not investing, what do you like to do with your free time?
Ooh, okay, it's a good one. Don't have a huge social life.
Introvert, we already got that already, so.
Huge workaholic, but when I'm not working, definitely spending time with the family, or I like playing basketball.
Nice. Well, if you're ever up in North Idaho, we'd love to play basketball and have you whoop our butts, because we're not very good, but we like to
We're
play.
not very good, but we play.
Still sounds like fun. Yeah, same here. I'm not amazing, but
Yeah.
I'll play.
Next thing is if anyone wanted to find out more about you, where can people find out more about you, or where can people find out more to invest with you?
For sure. So, I mean, we got a ton of content on our website. If they go to elevatecig.com. And what I always say is, if you shoot me an email, so Jorge or George, Jorge at elevatecig.com. You say that you heard me on this podcast, I can send over an arsenal of free content. I've got a bunch of checklists of how to find deals, what to do when you find a deal, even how to invest, and how to vet a deal sponsor.
And then, do you have any social media channels or anything like that?
Yeah, my George Multifamily, or Jorge Multifamily. I say that because it's spelled Jorge, but I call myself George. I know it's confusing, but
we took a shot in the dark on George. I'm glad that works. So
yeah. George with a J, Multifamily. You can find me on Instagram under that, TikTok. I think it's my full name for Facebook, but LinkedIn, same thing. I think it's my full name. But yeah, I'm pretty active on social media.
Awesome. We'll definitely link all that in the show notes as well when the episode comes out. So, well, definitely thanks so much for joining us today, George. We really appreciate it. Nick, any final thoughts before we hit a home run with this and send it off?
You know what? I just want to, thank you for being on and sharing everything that you've gone through. For those introverts out there, I hope this was inspiring, because you can make it happen.
Yeah, it's possible for sure. Nick and Jeremy, man, thank you guys. I really enjoyed it. It was very not scripted, right? Good conversation. I liked it.
Went with the flow. Have a good time. I love it. It was good talking with you. So,
all right, George with a J. See you later. Jeremy with a J.
Right.
I'm out of here.
You're the only one without a J.
No J for me. Bye-bye.
Thank you so much for checking out the Investor Shed podcast. If you enjoyed your time, make sure to leave a 5-star rating and review on Apple Podcasts and Spotify. Follow along on YouTube, TikTok, and Instagram at The Investor Shed for shorts and promos about each episode. Do you want to be a guest or know someone who has great real estate investing advice and stories? Reach out to us at theinvestorshed@gmail.com.